Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today, as every weekend, I give you my weekly update for the last week, week 15 of 2021. And it was quite a busy week in different circumstances. First of all, personally, I'm hidden by the coronavirus right now, and I'm not infected, so don't worry about that. But since I'm a contact person, I have to stay in quarantine and take care of my daughter. And so I was not able to upload a lot of videos lately, and hopefully next week or in the next few days this will come back to normal, and then I will also upload more videos again. And on the other hand, also in my portfolio, it was a busy week for different circumstances. First of all, the Q1 earnings season just started, and so also some of my positions in my portfolio reported their earnings last week. First of all, Wells Fargo reported the Q1 earnings, and therefore I go to Zach's very good website for earnings and news about the stock market at all. On April 14th, Wells Fargo reported the Q1 earnings, and they say solid mortgage and capital markets performance supported Wells Fargo first quarter 2021 earnings of $1.05 per share, which surpassed the SEC's consensus estimate of 69 cents. Results included the impact of $1.6 billion decline in allowance for credit losses, backed by an improving economic environment and lower net charge-offs. The quarter's total revenues were $18.1 billion, outpacing the SEC's consensus estimate of $17.6 billion. Further, the top line was above the year-ago quarters of $17.7 billion. So overall, good numbers, surprising good numbers of Wells Fargo. And after this report came out, the Q1 earning report came out, the stock just jumped up 10% since. The market also seems surprised by these very good numbers, and this looks very good. It seems like Wells Fargo maybe can cut the corner. We will see how this will work out on the long term. And for me, I bought my Wells Fargo shares here at the green dots in March 2020 for in average $31.74. And since then, we hit the bottom, and then now we are up to $43 right now, or 40% of my position. So very good, very nice, and hopefully Wells Fargo can cut the corner here and can be a good long-term investment. When you follow me for a while, you know I was very skeptical about the future of Wells Fargo. This was the reason I don't add more. Maybe I was wrong with that, and it seems like the future could be brighter. We will see if they really can do that. And Wells Fargo right now is 3.48% of my portfolio, and here you also see the whole pie of my portfolio. And if you're new to my channel, you find deeper analysis to all of these companies on my channel. So check this out. You find the link to the playlist for my whole portfolio up on the screen, or also down in the description. The second company who reported the Q1 earnings last week was JP Morgan. And also JP Morgan beats their earnings estimates in Q1. Large reserve releases along with solid capital market performance drove JP Morgan first quarter 2021 earnings of $4.50 per share. The bottom line handily outpaced the SEC's consensus estimates of $3.05. Results included credit reserve releases and the contribution to the company's foundation. Excluding these, earnings amounted to $3.31 per share. The company had earned 78 cents in the prior year quarter. So also JP Morgan beats the estimates, also very good numbers. I bought my main position in JP Morgan in April 2020, and in average my purchase price is $94, and so I'm up already after the latest run 65% with this position. So also very good, very nice, and JP Morgan seems to me the best, the most solid bank in the US, and that's the reason why I hold it. And maybe I also hold it for the long term. Of course, this depends on the price. If we come to prices which are way over the intrinsic value, then maybe at some point it's time to sell. But right now we are over the intrinsic value, but not that much that I think about to sell JP Morgan right now. And JP Morgan right now is a little bit bigger position in my portfolio with 4.63% of the whole portfolio. And last but not least, Progressive Insurance also reported the Q1 earnings. The company posted first quarter net income of 1.48 billion or $2.51 per share, up from 692.7 million or $1.17 per share in the same period last year. The expected estimates was earnings of $1.72 per share, and so they beat it with a $2.51. The quarterly revenues rose 23% to 11.4 billion from 9.3 billion in the year ago period. On average, 7 analysts expected the company to report revenues of 11.2 billion in the quarter. And so also Progressive beat the estimates. Also here, very, very good, very solid numbers. Progressive is one of my latest positions. I bought them in March 2021 for an average of $91.62, and so I'm already up in this 1 month around 8%. Also good start in this investment, and as I said, you find also deeper analysis of Progressive on my channel or here up on the screen. Is part of my portfolio with 3.28%. And then there was also a transaction last week because I sold my Air Canada stocks. I bought my Air Canada shares here on the green dot in April 2020 for $18.50 Canadian and sold then last week for $26.80 Canadian with a gain of 62%. So a nice trade overall. And the reason I sold is that the government bailed them out. And therefore I go here through the article of Bloomberg. Air Canada shares fell after the company reached a deal with the federal government for loans and equity worth nearly 5.9 billion Canadian, making the state a shareholder of the country's largest airline for the first time since the 1980s. The dilution for shareholders was greater than we had anticipated, Kevin Chang, an analyst at Canadian Imperial Bank of Commerce, said in a note. If all the warrants were exercised, the government would own 9.7%, Chang said. In return for the money, Air Canada agreed to restrict share buybacks and dividends, keep employment at April 1st levels, and follow through on a deal to buy 33 Airbus made at a factory in Quebec. Executives won't be allowed to earn more than 1 million Canadian dollar, and the airline will resume services on routes it suspended to distant locations. So the bailout of the government was necessary, I guess, for a long time. When you watch my other videos about Air Canada, I really hoped they don't need a bailout, and I thought the financial position of Air Canada is strong enough to not need bailout. Now it's there, and with that also the impact of the government is there with the restriction of the share buybacks and dividends and so on. And so I decided to sell my position because I don't like if the government have impact on the company, at least not in a way of a bailout. And so it was time for me to sell my position in Air Canada. And the reason for that is, since I'm from Germany, I have no good experiences with bailouts. If I look to the bailouts of Commerzbank a few years ago, or Philipp Holzmann also a decade ago or so, or latest with Lufthansa, all the time the shareholders was the losers of that, and I don't like that. So I don't like that, and so I don't stick with Air Canada, even if I still think they have a good position, a good market position, but I just don't like the impact of any government. And then last week there also came in some dividends. First of all, I received a very small dividend of Progressive Insurance of $2.72. And I also received my dividend from LEG and PGR of $27.54. So a little bit of cash flow into my portfolio. And then, last but not least, let's take a look at the overall performance. So the performance of every stock in my portfolio looks like that since the start of the 2nd of December of 2019 when I started this North American portfolio. And the best performing stock is Caterpillar with 109% up, followed by Walt Disney, LEG and PGR, Imperial Oil, and so on. And even my newest positions, Allstate and Progressive, are already in the plus. So this looks very good. Very nice. Also, the overall performance of the portfolio is impressive. Since the start at the 2nd of December 2019, this portfolio rose 65%, which is a big outperformance to the S&P 500 in the same time span of 34.4%. Or in other words, my portfolio outperforms the S&P 500 by over 31%, which is great. And if you like this idea of long-term value investing, then please like this video, share this video, watch all my other videos and subscribe to my channel. I'm very close to the 1000 subscriber mark, and I would be very happy if you just follow me and make this come true, that I would just reach this mark. This was never expected by me. The only thing I ask you for is to like the video, subscribe to my channel and follow me on my road to financial freedom. And with that, I want to say thank you for watching. See you the next time, then with another analysis of another stock. See you then. Take care. Bye bye.